Thank you for staying tuned. Now, according to the latest data from the National Bureau of Statistics, capital inflow into Nigeria from the United States and United Kingdom, South Africa, United Arab Emirates, the Netherlands, and Mauritius hit $31.82 billion in 3 years. Well, the data which showed that the 6 countries accounted for 83.32% of the total capital of $38.18 billion imported into Nigeria from over 100 countries from January 2019 to September 2021. Comprises of 3 main investment categories, namely foreign direct investments, foreign portfolio investments, and other investments. While the Central Bank of Nigeria attributes the development to the adverse impact of COVID-19 pandemic, economic analysts and experts are of the view that rising security challenges, exchange rate fluctuation, and difficulties in repatriation of profits by foreign companies, among others, may have contributed to the performance of the capital inflow. I introduced him earlier. He's the head of retail investments at Chapel Hill, Denham, Mr. Ayodeji Ebo. It's good to see you, Mr. Ayodeji. Good afternoon to you.
Good afternoon, and thanks for having me.
Yes, I would also like to have your reaction to this. The CBN is saying that FX issues, security issues, and all of that. What do you think is responsible for this, looking at what we are, 31.82 billion, and just from US and 5 other countries?
Yes, I think CBN is also right from the angle of the FX. So when you look at the numbers, about 38 billion in the last 3 years, and out of that, in 2019, we had about 23 billion, which is about 65% of the total amount that we're looking at. You also look at 2020, which was about $9.6 billion. That's about 25%. So the balance is for 2021 is about 13%, which is about $4.5 billion. That's for 3 quarters, but even if you analyze that, you would still see it will be close around $6 billion. And this is very obvious. You can see the trend at which the total capital importation has been declining. So when you break it down, you would see that even the FPI, that has been a major support that provides liquidity, FX liquidity to the CBN, that has also dwindled significantly. And we can link that. We saw that reduction in supply of FX in 2020. Yes, it's not, we won't blame CBN for that, but solely for that, because we saw that decline in oil prices, which impacted on the ability of the CBN to generate FX. So that also affected confidence, and a lot of the foreign investors were unable to exit the market at that particular time. So what we've been seeing in the past few months or few years is that investors are trying to exit the market because confidence has been eroded. And what the FDI, which should lead to growth, that has also been reducing. What part of what has saved us a bit regarding the FDI, when you look at the FDI, the equity portion as is the major part of it, which accounts for over 90%. That's yes, has reduced on a year-on-year basis, but still very substantial when you look at it across the capital importation data. So the fintech and startup companies that we have in Nigeria has been attracting a lot of funds, and that is responsible for that interesting numbers that we're seeing for that angle. But by and large, insecurity also plays a major role. No one wants to come and invest where the lives of his employees or of his staff will not be secured, or even the property that you're investing in will not be secured. So there's a lot of issues that we need to deal with if we want this number to grow. And when you look at the role the FDI plays, it helps us in development. Government is constrained. When you look at the budget, already projecting close to about 8 trillion naira, there's borrowings. So you would see that even for the borrowings, a lot of the borrowings will be going into recurrent expenditure that are not really productive, as not productive to the economy. So by and large, there's a need for us to see how we want to tackle some of these issues or factors that will be identified if we want to attract both the foreign direct investment that is good for growth, as well as the FDI that provides that stability in terms of FX liquidity in the economy.
Great stuff. There now, FDIs, FPIs. Many times we talk about FDIs giving that form of relaxation, other than FPIs that could be moved at any time. We know what happens basically around that. When do you see FDIs, foreign direct investment, really coming back into the country, despite all of the challenges that we face? Because that's more, I think that's more dependable, if I'm allowed to use that word, than having FPIs all around in the country. Can you take us through that? What do you think, or when do you think we can get better with that?
Okay, thanks. You asked a very interesting question, and sadly, this is a pre-election year.
Yep.
And the current president has served his 2 terms, so it means that we'll definitely have a new president, which increases the uncertainty. So foreign direct investment is long-term investment. It takes a longer period of time. So when they are investing, they have that long-term projection. I believe that before we begin to see an improvement in that would be around 2024, when we're able to know who the new president is and what are the views in terms of economic policies, in terms of the cabinet, and things that would really engender growth in the economy. So it's really important for those long-term investors to establish some of these factors. They need to know whether it's a pro-democratic, pro-economy, whether it's a conservative person. So all those things really would shape and would guide the direction of FDIs. Insecurity, fine, if we're able to tackle that, that would create a bit of confidence. But I don't see them taking any major move currently, except for those that are already invested in companies and they just feel they need to increase the stake in those companies. Yes, we may see that. So we're not saying FDI will totally dry out, but for those that are just coming newly, they would prefer to wait till end of the election towards 2024, and they want to see a bit of stability, a bit of shape in terms of the thought, to understand the thought of the new president, and that would also help them fit into his economic agenda.
Looking at attracting investment, I'm thinking that what new initiatives and dialogues do you see playing out also, maybe around the investment promotion commission and all of that, as we already are marred with production challenges, security, and the effects that we've talked about? What more initiatives and dialogues do you think we need to be having at this time?
Okay, thanks. I think ahead of even the 2024, we may begin to review some of our PPP arrangements that would assure the enforcement of contracts. When you look at different PPP arrangements in Nigeria, there's hardly, when you look at which example or which case study has been very successful that we can study and look at, is really very rare. So it means that a lot of investors are really wary of this. We've seen a lot of policy reversals. So if policies are not very consistent, people cannot plan, and we're expecting long-term funding, then I think we're joking and we're not telling ourselves the truth. So there needs to be a rejig of that policy that shows a bit of policy enforcement of contracts that lasts beyond any government. You know, part of what happens when a new government comes in, or when they are negotiating projects, people are looking at negotiating projects that will only last within the period of that government, because you don't know what the new government, when they come, whether they will reverse or whether they will cancel. So that has been affecting and hampering a lot of getting a lot of long-term investment in the country. So we need to prepare and look at that so that we provide that platform, that confidence ahead. Insecurity, fine, it's really very critical. We need to intensify efforts to ensure that we provide a lot of confidence and bring insecurity to the minimum as much as we can. And I think if we are able to prepare ourselves ahead of that, we just to add, we can also improve on some of the incentives. So we have, when we look at things that we import a lot, can we partner and provide a partner with some of these companies that produce some of these items so that they come here to set up? We know they all try to set up at neighboring countries. Most producers want to set up close. There's what we call proximity to market, closer to the consumers. But because of the insecurity, the cost of doing business, the poor infrastructure setup that we have, most of them are not going to be profitable setting up in Nigeria. So we need to deal with all of these factors if we want to really attract foreign direct investment. And beyond just attracting foreign direct investment, something interesting that it will help us solve, which we have been throwing money at around insecurity, is unemployment issues. If we are able to have more companies set up in Nigeria, it will reduce unemployment. And when you look at the looking at data, the correlation between insecurity and unemployment. If you are able to tackle unemployment, you would see that insecurity would drop on its own. So there's a need to focus on that, not about if we earmark even 10 trillion to insecurity and there's no sufficient job, then we are just joking. So focus should be on getting that investment that will create the jobs we need so that we can all also live in peace.
Mr. Ayodeji, you just touched on my next line of thoughts. I was thinking around Ghana being the preferred destination for manufacturing and tech companies as we speak. I'm not saying that this could, one way or the other, redefine our international trade policies and, of course, prospects within the AFCFTA. What are your thoughts around this?
Okay, thanks. When you look at most of these countries, they are also forward thinking. So they are leveraging on some of our weaknesses. So they've discovered that for us, or for most of these companies, is really very strenuous for them to set up companies in Nigeria. So they've looked at some of those weaknesses, some of those things that have been a major setback for them, and they've built on it and used it as incentive. And that is why you have a lot of companies trying to set up in Ghana. So when you look at in terms of cost of production, would be significantly cheaper in Ghana than in Nigeria. When you look at the challenges of multiple taxation, that has also been taken care of to minimize that so that the burden is not much and these companies can be really very profitable. You spoke about AFTA, that's the African Continental Free Trade Zone. So that on its own, as even cages, it means that goods can easily come in from Ghana into the country. Redefining that now, I feel it may be a bit late because we've already signed to be part of this agreement. So changing it now would be very difficult. A lot of these companies will also leverage on that because the tariff that will be involved in bringing things from Ghana, from Benin Republic, would be cheaper for them. By the time they had even the tariff that is even agreed, will still be cheaper for them to produce in those countries and bring them to Nigeria. And what we are just doing is that we are creating jobs for a lot of these countries at the expense of jobs in Nigeria.
So finally, this downward trend has been monitored, and many say it's been on for quite some time now, considering all of the facts. What is your outlook? What are you thinking around as we move in 2022, talking about inflows into the country, even as we know it's a pre-election year?
Yeah, so for me, I believe that it will still remain very low. A lot of the starting with the foreign portfolio investors, a lot of them are also trying to exit, given that we're expecting that rates would increase in the global space, which means that it will be more attractive for those instruments. There will be more attractive compared to Nigeria. So it will reduce us seeing inflows into the country. Looking at FDI, given this is a pre-election year, we don't expect that there will be much inflow within that space. It will still remain very low. No investors like uncertainty, and political risk is a major factor that is considered when you are reviewing proposals. So I believe by and large that it's really going to be it's really not a pretty and interesting time for us in Nigeria because of the political risks that is all staring at us in the face now. And as a result of that, that will limit the amount of investment that we may attract into the country within this particular period.
It's a good way to live an intelligent conversation. I've been speaking to Head of Retail Investments, Chapel Hill, Denham there, Mr. Ayodiji Ebo. Thank you so much for squeezing out time to talk to us on the show today. We appreciate this. We don't take it for granted. Do enjoy the rest of your day.
Thank you for having me.